Yeah, this is good. This is 50 rupees of note, and using this 50 rupees note, you can start investing in gold and silver. No making charges, no GST, no hassle of having a locker for the storage. The point is that using this 50 rupees, you may not even be able to buy a pizza, but using this 50 rupees note, definitely you can start investing in gold and silver. And you could do this by using gold and silver ETFs. And best part is that both gold and silver ETFs are regulated by SEBI, so you don't need to worry from a regulation perspective. In this video, I will show you step-by-step process of how to start your SIP in both gold and silver using as low as 50 rupees. Before I start this video, let's also have a look at perspective on the SIP returns of gold and silver together. So if I talk about the data, which is as of September 2025, if you did monthly gold plus silver SIP in both the precious metals, and if you look at the last 15 years of time horizon, you would have generated around 14.22% of SIP returns. 10 years, 19.73, 7 years, 23.96%, 5 years, even better, 27.84%, last 3 years, 39.74%, and last 1 year, 74.99%. Of course, last 1 year has been an exceptional year for gold and silver. We all know about it. By the way, these past returns do not guarantee the future returns, but SIP is all about not timing the prices of gold and silver. If I just talk about the last 1 year, it has been exceptional. If you look at the gold, so far from 1st of January, at the time of recording this video at around 17th of November, gold has gone up by almost 55%. If you look at the silver, it has gone up by around 72%. And now the investors are divided into three camps. Camp number one is there are people who are saying that, you know what, the gold and silver has done a beautiful rally now and it is time for them to calm down. We will only invest if the prices come down. That is one perspective on gold and silver. Second type of investors are those who are saying that, you know what, we can't really predict what will happen in future. These prices could go up or come down. We rather do SIP in gold and silver. That's the second view. And the third approach could be a hybrid view. For example, let's say you want to invest 5 lakh rupees in gold and silver. You might say that, Rahul, what I'm going to do is, 50% of this 5 lakh, which is 2,50,000 rupees, I'm going to keep it for buy the dip in case the prices crash. Okay. But the remaining 2,50,000 rupees, what I want to do is start my SIP now because I don't know what the future will be. And to me, that is very, very one good sensible view of looking at gold and silver allocation. If I just speak about SIP approach, and if I just pick up this 50 rupee note and I say to you that let's do a SIP of 50 rupees in gold and silver, is it possible? I'm going to show you that. But the main benefit of SIP is that whether the prices in future go up or down, you are buying at an average price. And that is the beauty of SIP. And last point before I show you how to do SIPs is that when you are doing SIPs, you are actually building a habit that may stick with you for long term and you might become a disciplined investor. With that, now let me quickly show you how to go about doing SIP in gold and silver together with as low as 50 rupees. For us to be able to start SIPs in gold and silver ETFs, we are going to need a demat account. So what I've done is I've logged into my Zerodha demat account, right? What you see on the left side is I've got a lot of silver related ETFs here and you can see the current prices, etc. So that is one. And the second you've got is the gold ETFs. Now, which ETFs to pick from here? Very, very quickly, what I'm going to do is show it to you some criteria. Okay. So what I'm doing is I'm going here on this ticker tape website and I've got a list of all the gold ETFs. Since we want to start our SIPs, which is as low as 50 rupees, what I'm going to do is I'm going to sort this out by the closing price of these ETFs from low to high, right? So at the top, you see three ETFs, which is Angel One, Tata and Zerodha. Again, none of these are recommendations, but I am just showing you the logic here. If you look at these three ETFs are trading below 20 rupees of level, meaning that if I were to buy 1 unit of any of these ETFs, then I can very well buy it at less than 20 rupees, right? From a gold perspective. Now, price is one parameter. It doesn't mean that we have to go by just the price. Okay. What we need to look at is the liquidity also in ETF's case. So what I've done is I've added 3 months average volume here. Now Angel One, unfortunately, there is no data here, but for Tata and Zerodha, I've got some data here. Tata's liquidity is very high. In fact, this is the most liquid ETF as of now. And the reason is very simple. This is almost cheapest. If you look at the closing price as of yesterday, it was only 12 rupees 18 paisa. So therefore, it is quite cheap and hence the liquidity is very high. That could be one logic. So if you look at the liquidity here, 3 months average volume, 4 crore 65 lakh 80,000 rupees of units have been traded, right? If you look at Zerodha, very good liquidity again, 72 lakh 12,621. So both of them are highly liquid, right? And that is another criteria that we are checking in. Next is the expense ratio. If you look at the expense ratio here, Tata is slightly costlier as of now, and these expense ratio could change in future, right? So 0.40 and 0.32. Now you can very well make a decision which one you want to go with. I can't give you any recommendation. It is up to you to select, but you can select any one of these, maybe between number 2 and number 3. You can choose one of them because it is well below 20 rupees. If 50 rupees is not your limitation here, then you can go and choose from any other ETFs. I'm just sticking to 50 rupees as I started this video with a 50 rupees base case. Now let's come to silver ETF. So what I've done is I've got 16 silver ETFs here. Again, I have sorted them from low to high pricing. From pricing perspective, there are only 2 ETFs, Tata and Zerodha. Again, their closing price as of yesterday was lower than 20 rupees. So meaning if I were to buy one silver ETF, I can buy it at less than 20 rupees, and one gold ETF also I can buy at less than 20 rupees, meaning less than 40 rupees is what I will spend if I were to pick one ETF if the prices remain more or less constant. I'll come to that point in a minute, right, when I talk about the funding, etc. But if you look at these 2 ETFs from a volume perspective, again, very good liquidity in both of them. Tata is 3 crore 35 lakh 75,000. Zerodha in the last 3 months average volume has been 91 lakhs. So which is a very good liquidity. Not worried about liquidity at all. Expense ratio, if you look at it, Zerodha's is slightly lower, 0.34, 0.44. You can compare the returns, etc. last 6 months, 1 year, etc. It is up to you to check out the returns. But from expense ratio and average volume perspective, and from a closing price perspective, these 2 are fitting the bill nicely. Now let us now go back to our Demat account, and what we are going to do is we are going to build our basket here. This is the first step that we are going to do. So we are going to simply click on new basket here, and you can name this basket anything. So I'm going to say gold and silver ETF basket. It could be anything really. So simplicity, gold and silver ETF. Now I create it. The next thing what we need to do is add our ETFs into this basket, right? For example purposes, what I'm going to do is I'm going to add Zerodha's silver ETF into this basket. And from gold perspective, I'm going to add Tata's, right? So for example, here, let's say silver case, right? So let's click on silver case, and this is Zerodha's silver ETF. Now few things we need to note here. One is it is nudging us that silver ETFs are trading at a premium due to shortage of physical silver. Please check the INAV. What is this concept? Let me very quickly show you. So if I go to this NSE website here, what you note is that Zerodha's silver ETF closing price is around 15.80 at the time of recording this video, and INAV is around 15.89, meaning that it is trading well below the INAV price. INAV is indicative NAV price, net asset value, meaning that what is the underlying value of this one unit of ETF, that is 15.89. You're getting it at 15.80, which is a very good thing. Why this is happening? Mainly because of the demand supply gap within an ETF. Please make sure that this trading price should be lower than the INAV. If you're doing that, it means you're getting it at discount. If this price is higher than INAV, it means you are paying premium. Okay, hope that concept is very clear. Now if I come back to our Zerodha Demat account here, second thing we need to do here is that we have to make sure that market checkbox is clicked here. Why so? Because you are going to set up a SIP, and the price at which you are going to execute these orders automatically, they need to be at market price, because you don't know what the prices will be. If you set up a limit, then you will have to mention a price here, and you don't know what the prices will be in future, and your orders might get automatically cancelled. Therefore, please make sure you put market here. Now, how many quantities you need, it is depending on how much of SIPs you want to do, whether you want to do 50 rupees, 500, 5,000, 5 lakh, that is up to you, right? For simplicity, I'm just going with one quantity here because I'm assuming that we are doing a 50 rupees of SIP. Now, next thing I would do is simply add it here, right? Now it has added into our basket. We are not going to click in execute, because if you click on execute, what that simply means is that it is going to execute the order if the market is open. So don't do that, right? Next thing we need to do is add our Tata Gold ETF here. So what we are going to say is simply type Tata Gold. Okay. Once we type here, it comes here, we add it. Again, the same process applies here. We are going to make sure it is on market. I'm again going for one quantity here, and I simply said add here. Now both these ETFs are added into this basket. Please make sure you're not pressing execute, simply close it. When you close it, what happens is that your basket is created. You can anytime come edit it, delete it. If you want to edit it, you can come back, edit the quantities and things like that. You can do a lot of things, right? But now the next step will be to create a SIP using this basket. So simply go to SIP and here you say create a new SIP. First thing, you have to name this SIP. So let's say I am saying gold and silver ETF SIPs. I am saying starting 3rd of December 2025. Why 3rd of December 2025? I am assuming that if you're a salaried person and if your salary comes, let's say on 30th or 1st of every month, then after 2 days, you want to make sure that you are investing some money from your salary into this, right? That's the naming convention I'm going to follow. Next thing what we need to do is we are going to click on this gold and silver ETF basket that we just created. If you have multiple baskets, then you only select gold and silver. This approach actually you can apply to stocks as well. If you want to have any other ETFs or stocks, if you want to invest, for example, in Nifty 50 based ETFs, you could do that as well, right? This is a simple approach you can follow for any other ETFs and stocks, right? So here, let's say the basket is gold and silver ETF. Now comes the scheduling of it. So let's say 1st of every month. Now I would say don't go for 1st if your salary is coming on 30th, because if there are 1 or 2 day delays, you want to make sure you build that particular timeline. So let's say 3rd of every month. Execution time, when will Zerodha execute this order? You have to provide that input. 9:30. Now again, you can choose whatever. I generally like to go somewhere around midday, because in the morning when the market opens, there might be huge volatility. When the market is about to close, the volatility generally goes high. So midday might be a good way. Again, there is no proof here that this is going to give you better returns or not. But from a simplicity perspective, 12:30 is what I've chosen. And you simply click on create and you will see this SIP coming up here. It is active. You can see that in the next 16 days, it is going to get executed. And this is a gold and silver ETF. Now, if I click on this, you can go and edit it. You can pause it. You can delete it. You can do all of that, right? Now, one thing here to note is that just because it is active, it doesn't mean it is going to automatically go and take money from your bank account. Please understand this very, very clearly. For this SIP to get automatically executed everything, few things need to happen. Number one, in your funds, you need to have funds. So for example, if this is getting executed on 3rd at 12:30, you need to have sufficient funds in your Zerodha account, right? Now, either every month you can go manually and add the funds depending on the prices, because the prices will fluctuate. Right now, if you look at this basket, right, if I go and show you, if I simply go and edit, we are showing here 27 rupees 75 paise is needed to execute this. But next month it could be 30 rupees. Following month, it could be 20 rupees. Following month, it could be 50 rupees. We don't know, right, what the prices will be. Therefore, one approach is that every month manually you go into Zerodha, add the funds, and before the execution date, you need to add the funds. Therefore, it is all done. If you want to automate the transfer of the funds from your banks to Zerodha, that also you can do. How to do that? Very quickly, let me show it to you. For this, what you need to do is go to this SIP screen and click on these 3 dots, say edit, and this SIP edit screen will open. At the bottom, you will find set up a bank mandate. So first of all, click on that bank mandate. Once you do that, it will bring you to the console page, and where you will see this button called create new mandate. If you've already created some mandates, you will find them here. If you've never done this, just follow along. Simply click on create new mandate. Once you click on that, you will see your bank accounts coming up. So which bank account that you want to transfer funds automatically every month, you can decide that. So let's select any of these bank accounts and click on I accept the terms and conditions, and then you say continue. Now what you see here is that it is going to DGO integration. Again, this is all very well automated. What you see here is that you are giving a mandate here, which is starting 17th of November 2025, and it is going to go up to 16 November 2065, right? And it's asking you to now authenticate yourself. Either you can use debit card, net banking, or Aadhaar. I'm going to click on Aadhaar and see how this process goes. Very, very simple process. Click on this, click on Aadhaar, then you submit, and then what happens is that it will take you to this screen where you will see all the details of this mandate. Simply say proceed. Again, you will see the terms and conditions. Just simply click on the checkbox and continue. And here you will have to enter your Aadhaar card details. Once you enter your Aadhaar card details, you are going to get an OTP. This is mainly for verification. Once you get your OTP done, you verify the OTP here, submit, and then once the OTP is verified, it is going to say that your mandate is accepted and your mandate is now set up. It takes roughly, let's say, 3 to 5 days for these mandate to be set up in your account. And once this mandate is set up, what happens is that you can go ahead and create a schedule. So for you to be able to create the schedule automatically, you go to the console again, you will find your mandate active after 3 to 5 days, and simply you can set up a new schedule. What you will have to specify here is the schedule name. Again, you can give it anything like gold and silver ETF. Here you choose the date on which you want this transfer to happen automatically. You choose the frequency of it, whether it's monthly or quarterly. In our case, it could be monthly. You enter the amount. You might say that, 50 rupees, 60 rupees, 500 rupees, whatever is your amount, it will automatically go and deduct it from your bank account and put it into Zerodha's account. Make sure the date you're choosing is 2 days at least before your SIP date, so that at least that money is transferred from your bank account to the Zerodha account, and on the date of SIP it gets executed automatically. You don't need to worry about anything. The only thing you need to keep an eye in this entire process is the silver prices or the gold prices. If the prices are going very high, then accordingly you will have to just adjust your schedule amount here, because this amount might not be sufficient. But this is a very simple process, end-to-end process of how you can go about setting up your gold and silver ETF SIPs. This I have shown you using Zerodha. I do not know about other demat accounts. I'm sure you can figure this out. It should be very, very straightforward, simple process that I've shown you. Last point I want to talk about is now the taxation on gold and silver ETFs. Now, what you see on my screen is the gold ETFs taxation. Again, please make sure you consult your tax advisor before making any decisions based on this information. This is what I found on Economic Times. Now, before 23rd of July 2024, there was one tax regime. So if you bought any gold or silver ETF, before that, the rules were very different. But after 23rd July 2024, if you're buying and selling gold or silver ETF, the taxation rules are very, very different. Now, for gold ETFs, current rules are that if you're buying after 23rd July 2024, short-term capital gain will be considered if you buy and sell it within 12 months, less than 12 months, right? In that case, whatever gain you make on gold ETFs, you will have to pay based on your income tax slab for that particular fiscal year. But long-term capital gain tax will arise if you are holding it for longer than 12 months. And in that case, you will have to pay 12.5% flat with no indexation. That's the rule after 23rd of July. Before 23rd of July, the rules were slightly different. The definition of short-term duration was less than 36 months, meaning 3 years. And for long-term, it was more than 3 years. And in fact, the tax rates were also very different. Slab rate for short-term capital gain and 20% with indexation was long-term capital gain for the gold ETFs and gold mutual funds. For silver, my research says that it is exactly the same for the gold ETFs, but I found mixed information on internet. At some places, I read that there is a change in the rule from 1st of April 2025. Therefore, I'm not sharing that information with you. Please make sure you consult with a tax advisor on the taxation for the silver ETF. I want to make sure that you get it right, but it should be on the similar range in my view. I hope in this video you've learned a lot in terms of how to go about setting up SIPs, not just for gold and silver ETFs, for any ETFs, you can follow the same process. And in fact, for stocks also, you can follow the same process. If you like this video, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to bring such content for you at zero cost. Also, you can consider joining my YouTube community where almost on a daily basis, I'm speaking about various assets, for example, ETFs, stocks, mutual funds, giving you market insights, giving you a lot of analysis, which will make you a better investor in the long run. I hope you like this video. I'll see you in my next video. Until then, keep rocking.